This is a trend day. It's defined as when price moves consistently away from the opening range throughout the entire day. Now, these days are known to cause severe FOMO. But if I just bought at the start of the day and held all day, I would have made so much money. This model that I've been backtesting for the past 2 weeks is designed to recognize when a trend day may be happening and to capture a large portion of the move.
Okay, so this is called the Captain Backtest model because it was created by Matthew Mickey 1 and I'm just 21 on Twitter. Give them a follow. They're both extremely intelligent people. Captain Mickey is a U.S. Army veteran. He was a captain and he was a financial officer. So about the model, it's purely mechanical, no second guessing, no narrative, use no higher time frame analysis or indicators when I was backtesting this, and just one trade a day. At the end of the video, I'm going to add some further suggestions. Okay, so here are the rules. We're going to go over lots of examples in a little bit, but you mark at the high and the low of the range from 6 a.m. to 10 a.m. After 10 a.m., whichever side of the range is broken first is our direction. Even if it wicked it, we're counting that. Then you wait for a candle to retrace towards the other way, and then you wait for a 5-minute candle to close back over a previous 5-minute candle towards your direction. You enter with a buy stop or sell stop so that you get tagged into the trend. You long the stronger pair or you short the weaker pair, which is important because that's what I was really testing out while I was doing this. I had them side by side. So for ES, your stop loss is 5 points, you target 20 points, and NQ, your stop loss is 25 points and you target 100 points for a 4R. Okay, so here's our first example, and I'm going to add clips from where I was backtesting this as well so you can see it happen in real time. So we mark out the high of the 6 a.m. to 10 a.m. range. Then we wait until 10 a.m. Which candle breaks it? First, NQ breaks it. It's much stronger, right? Because ES is only here. So we're looking to long NQ. We wait for a retracement, which is a opposing candle close. Or you could also look for a candle that breaks the previous candle low. I only waited for a candle close in the opposite direction, and I didn't really look for a break of a previous candle low, but if I know someone who did do that and they had a higher win rate with this. But anyway, we wait for a retracement, then we wait for a 5-minute candle close above the previous one, which is this candle. We put our buy stop at the high of that candle, so we only get tagged in when the trend is continuing. So you get tagged in here, and then you put your profit target for 100 points, which gets hit quite quickly, and your stop loss is 25 points for NQ. Okay, here's a bearish example. You see with these divergences, we want to go with the weaker pair, which is ES. So it broke the range low here. Now we're waiting for retracement. So here is the retracement. Now we're waiting for a candle body close below the previous 5-minute candle, which is this one, right? Now we're going to sell stop here, 5-point stop, 20-point target. And you can see ES reached its 20-point target before NQ would have reached its 100-point target. Same thing here, where NQ retraced more deeply than ES did, broke the low of the range from 6 to 10 a.m. here. We wait for a retracement. This counts as a retracement because it took out the previous candle high, closed below it, so you just sell stop right there, and a quick drop. Now I'm going to insert some clips of me backtesting this real time. By the way, I used FX Replay for this. You can use code Tanja15 for 15% off. I really like it because they're integrated with TradingView. Okay, so here we are. We're marking out the range high and low from 6 a.m. to 10 a.m. We see that ES broke its high first, so we're interested in longing ES. There, that black candle there, the next one counts as a retracement. So we're going as the buy stop above that green candle as it closed above that black candle high. We buy stop above that 5-minute high as well. We put a 5-point stop loss and then a 20-point take profit, and then we just let it play out. So the rules are you can't trail your stop until 12:25. And by that time, it already had retraced, does as 12:25, sometimes does a little bit of a stop hunt. 1:30 created a little bit of a higher low. And over here, I'm looking at the 1:30 candle, I'm marking it out. The 1 minute 1:30 candle. And when a open high low close candle closes above that, then you trail your stop to the low of that 1:30 candle range. So again, I'm looking at the range from 6 a.m. until 10 a.m. See NQ broke that high first. We're looking to long NQ. That's our retracement candle. Now we're waiting. We're waiting until a candle closes above a previous candle high, which is that candle right there. We buy stop at the high of that 5-minute candle. You see, we did not get tagged in here, so it kept us safe. Now, again, right there, we had a 5-minute candle close above. So we move that buy stop lower to the top of that candle. I was a little late here, so I just got in a little bit later, which is fine. I basically market ordered here, as it was barely a difference. So since we're long NQ, our stop is 25 points and our take profit is 100 points. And we do not look to trail our stop until 12:25. So here we displaced a lot, and so I put it to break even. And then the next time we're looking at is 1:30. If the 1:30 low is higher than the 12:25 low, then you move your stop up to the 12:25 low, which is what I'm about to do right here. Now next, look what I do. I go to the 1 minute, I find the 1:30 candle on the 1 minute, mark out that range, and then once we print a candle above that range, completely above the range, so the open, high, low, and close, then I'll move my stop up to the low of that range. But this candle just takes us to the profit quite quickly, so you don't have to do it here. All right, so I'm looking to mark out the ranges. By the way, the 10 a.m. range ends at the 9:55 candle close. So if the 9:55 candle is the high, you just mark that high. So you see here, the 10 a.m. candle breaks over that high. NQ is stronger, so we're looking to long NQ. That black candle right there was a retracement, enough for my definition. So I'm looking to buy stop above that green candle, but I do not get tagged in. So now I'm just waiting for another 5-minute candle to close above a previous 5-minute candle. Right there, buy stop at the high of that candle. Stop loss is 25 points, take profit is 100 points. We get tagged in right there. Looks like 12:25 had a retracement. Now I'm watching the 1:30 candle close, and it closed higher than the 12:25 candle, so I moved my stop up to the 12:25 candle. After 1:30, I mark out the 1:30 candle 1-minute range. When we print an open, high, low, close candle above that range, right, like we did in that little doji, I'm bringing my stop loss up to the low of the 1:30 candle. And that worked out as well. So this is the open of the next day. I'm already just marking out the low of the range. This is 9:30 open. I'm just watching it run without me. Again, waiting until after 10 a.m. So again here, the 9:55 candle made that high. The 10 a.m. candle wicked above that high, so that counts that we want to go long. And then over here, I think I'm just going to go to the hourly time frame to see which one is stronger. NQ is stronger than ES here, so I'm looking to long NQ. That black candle was a retracement, and then we had a candle close above that black candle high, so we are buy stopping at the top of that 5-minute candle. Here we get tagged in. And it runs to our profit quite quickly. All right, here's another long example, right? That blue line is the range high, we break over it. And then that down closed candle counts as the retracement candle.
we had a 5-minute close back above, so I'm buy stopping in. And I'm on ES because it's stronger. Over here, I brought my stop higher because the 1:30 p.m. candle 5-minute low is higher than the 12:25 p.m. low. So I bring the stop up to the 12:25 5-minute low. Again, now I mark out the 1:30 1-minute candle range in that purple box. And then that candle right there, that doji, closed completely above it, so I moved my stop up to the low of that box. Here we are marking out that range high since it's pretty close to it. It doesn't hit it yet, so we're still waiting. It has to hit one of these ranges before 11:15, or else we do not enter any trade. Okay, so NQ does hit it at 10:50. So we're looking to long NQ. It had its retracement, and right now it's breaking above the previous 5-minute candle high. So we're going to just go buy stop at the top of that candle. And we're in. And it just runs to our target quite quickly. Here we're marking out the range high and the low. I'm also noting that NQ is much weaker than ES. So if it breaks the range low, I'm definitely going to short NQ here. You can also notice any structural differences on the hourly or any SMTs. So NQ broke that range low. We're there, it's retracing, right, those green candles. And then that black candle closed below a 5-minute low. So we're going to sell stop in at the low of that 5-minute candle. So then we're tagged into the trend. It works out quite quickly. I've noticed that every time it works out very quickly, it typically goes to a profit target. Right before 10 a.m., we're marking our ranges. I'm noting that NQ was stronger there. So you can see that ES is weaker and it broke that low faster. So we're looking to short it. You already had a green candle retracement, and that's your 5-minute candle close below that candle before it. So we're going to go sell stop into the trend. We don't get tagged yet, which is fine. Now we do get tagged. And we're not even looking to move our stop until 12:25 p.m. So just let it play out. This is 12:25 right here, and it quickly just runs to my target. So again, the 4-hour range is over at the end of the 9:55 candle. So mark that the high from that, even if the 9:55 candle is the high. So NQ is the weaker one here. It retraces with that green candle. And then right here, this is the 5-minute candle that closes below the low of the previous 5-minute candle. We sell stop at the low of that. Get tagged in. And it runs quite quickly to our target. Okay, here's an example where price is not even breaking either side of the range before 11:15. Then you just leave it alone. Do not enter the trade. You see that it wasn't a trend day? Don't enter the trade then. If it doesn't break either side of the range before 11:15, don't trade it. Okay, here we are again. Looks like the range low is made at like 9:45. The range high is from 6. So it's quite a large range. Looks like ES broke the range low first. So we're looking to short ES. It had those green retracement candles. And right here, this candle closed below the previous one. You have to wait for the close of the candle. So we're going to go sell stop at the low of that candle. So we get tagged in here and it works out right away, which I really love about this model is that it'll pretty much tell me when I'm wrong right away. Now to review the outcome of this model, I started with a $150,000 account January 1st, and by present day, I ended with $206,000 for about
$56,000 net profit or 37% increase. Considering SPY is up 13% year to date, it beat the market threefold. Now imagine just scaling this up to multiple accounts. Like, I'll be using this model on a separate Topstep Combine. I'll be updating you guys on it. Topstep is a funding company I trade with, which offers an opportunity to not risk your own money if you can pass their challenges. For their cheapest option, it's only $49 for an account that gives you $50,000 of leverage. So you can check out the link in the description below if you're interested. I might be also, considering 35 trades could have broke even, I will be adjusting how I take profit because a lot of the times I wasn't taking partials or anything at different liquidity levels. But yeah, some people are asking the max loss streak. It is 9 for me, but at the beginning I was taking more than one trade a day. I was trying a second time, which I definitely do not recommend. So you can see here, I lost twice in a day. So technically this would have been 7 losses. But yeah, if you keep your risk managed and you just stick with the model, it's profitable. It's awesome.
As this model was purely mechanical, I'm now interested in adding a discretionary lens. The first rule I'm going to use is do not trade FOMC days, as these days are typically not trend days and they typically blow out stops from both sides. I'll also be taking partial profits at obvious liquidity levels such as daily highs and lows and weekly highs and lows. But what's awesome is that this model just standing alone is profitable and it doesn't take much brain power. Now I encourage you guys to backtest it yourselves, see if you like it, get that screen time, and yeah, let me know how it goes. You can add your own discretion as well. In the meantime, feel free to check out my trade recaps using ICT concepts.